So good morning students. Students, now we are doing the methods of recording depreciation. So students, two methods of recording depreciation is first method and second method. So in first method students, we charge the depreciation to from asset as we did earlier in original cost method, in diminishing method, that when we are preparing machinery account or when we are preparing any asset account, in that we will charge the depreciation from that account. Okay, so in the first method we do not prepare any different account, we do not prepare any provision for depreciation account, we charge the depreciation from the asset account by writing by depreciation on the asset account. So when provision for depreciation account is not maintained under first method, so when depreciation is provided, the first entry is for providing depreciation account debit to asset account. We did this, that whenever we prepare an asset account, we write on the buy side of the asset account by depreciation. On the second, when we transfer the depreciation, so students, when estimated working life of the asset is completed, after that the total depreciation, okay, the total of depreciation will transfer to the profit and loss account, and the journal entry at that time will profit and loss account debit to depreciation. So depreciation is termed as an expense of the business, as a loss of the business. That's why depreciation is transferred to the debit side of the profit and loss account. Now students, come to second method. So under second method we are preparing a different account, to that we call provisions for depreciation account. Okay, under second method, by creating provision for depreciation account, or also called accumulated depreciation account. So in this students, two accounts are opened. First is asset account and second is provision for depreciation account. Okay, so we will do a numerical related to this, so it will be more clear to you. So what are the journal entry at that time for providing depreciation? So when depreciation is provided, in the first method we charge the depreciation from asset, but in the second method we charge the depreciation from provision for reserve account. Okay, provision for depreciation account. Okay, so when another account is open, the name of the account is provision for depreciation account, we write on the provision on the depreciation account on the buy side by depreciation account. We do not charge from asset, we charged it differently, opening account, that is provision for depreciation account. Next is for transfer of profit and loss account. When profit is transferred, okay, when depreciation is transferred, student, now see in which account we charge the depreciation, from provision for depreciation account. So for depreciation is transferred from provision for depreciation account to profit and loss account on the debit side of profit and loss account. Next is sale of assets. So students, when asset is sold, the journal entry is bank account debit or cash account debit to asset account. Okay, when transfer provision of depreciation, so at the end of the time when asset is sold out, the total provision of depreciation, the total depreciation is charged, is transferred to asset account. At that time the entry is provision for depreciation account debit to asset account. So we will solve a numerical question. Okay, so question number 20. So question number 20 in your book. So this is related to provision for depreciation account. Okay, so question number 20. So in this statement is Sharma Limited purchased on 1st January 2010 a plant for rupees 5 lakh. On 1st July 2013 the plant was become obsolete and was sold for 2 lakh. Okay, it was sold for